Hey, coin traders, what's going on? A lot of red in the markets today, so just want to do a quick little update on kind of what we're experiencing right now, especially after 4 nice days of big upside after a lot of news-driven events have pushed money and a lot of buying into the space. So if you are enjoying this type of show and the content, make sure to hit the like and subscribe buttons if you haven't done so just yet. But yeah, so over here on the right, you can see pretty much all of the cryptos in the red today. Actually, I think on this list anyway, everything is red. A lot of stuff is in the double digits and some stuff's closing in on 20%, like Filecoin, for example. But as always, Bitcoin is the big name, so let's talk about that in the show today. So right now, especially after a very, very overextended run, so from the bottom, which did bottom out at 19,568, we were looking at a rally for essentially at the peak, we saw it over 35%. Now, obviously, when we closed, we were at 26-ish, but still couldn't close below 25,000 psychological. So still an extremely big, important, relevant line up overhead that the bulls have not been able to break after multiple tests. And especially this is when we were getting the peak amount of volume coming in that we actually haven't seen since the middle of January. So if there ever was going to be a time, we would expect it here coming in soon, especially while we do have the hype from a lot of bank crisis information, and tack that on too with the good decreasing CPI numbers. But so despite everything being down substantially, Bitcoin's actually not down that much, relatively overall pretty flat, as you can see. So right now we're actually defending a very nice zone in between 24,000 and 25,000. So I think really it's going to depend on what happens here in the next couple of days. If we can actually maintain 24,000 as support, consolidate, that would be a good shot for the bulls to actually run up and be able to break and finally hold a close on top of that $25,000 level. Now, if that does happen for the bulls, then likely we would expect this to be a very nice support point on the way down and actually testing that confirmation, since it was just such an extremely strong resistance on both of these attempts. So realistically, what we would see if we do end up breaking 25,000 is a pretty sure bet that we're going to end up rallying up to higher levels. So let's actually look at a target for that. But especially since we haven't been able to break 25,000, ideally, once that happens, we'd have a pretty clear shot all the way up to about 28,000. And then the next target to the upside after that would be about 32,000. So not really trying to make any predictions just yet. And as we mentioned before, technical analysis is not about making predictions. It's about understanding possibilities, probabilities, and being able to reduce your risk. And so I do want to flip on over to Twitter really quick. Yesterday did make a post last night about the formation of a broadening wedge or a megaphone pattern. Now, essentially, this is just a continuation pattern similar to a pennant, but kind of in a reverse type formation, which is a little weird and it's tough to understand since we do end up making lower lows and higher highs. But overall, make sure you are staying updated with all the current posts and tweets on Twitter. At @coin_trades is the handle. Do look forward to seeing everyone over on Twitter. But yeah, so if we actually go ahead and look at this formation a little bit more, you can hopefully see the pattern that we did draw out. And so if we do talk about this being a continuation, then we would basically expect a pattern from the bottom to the start of the continuation pattern. So if we do actually scrunch this up, based on wherever the breakout ends up happening. So for example, if we do see it above 25,000, then effectively we would be looking at that as being our target right around the $33,000 level, about 33.5. But effectively, like we talked about, the 32, is going to be more of that target to be looking out for if in fact we do get a continuation. Likelihood right now is not favoring that type of movement, especially given a lot of the other economic factors. And in fact, I think the only reason we did see a bounce and a formation of a broadening wedge is just because of the current economic factors with SVB and also an extremely, or not extremely, but a pretty bullish CPI release yesterday. So needless to say, I think we could see a lot of rub off from the altcoin space. So despite the fact that Bitcoin's not down as much as the rest of the altcoins, I do think that the overall space can just continue to press on to the downside and allow the bears to actually start to take control once again. At least to run down and test some of these lower supports. So we talked about 24,000. Below that would be about 23,000. And then below that would be about 22.5. So we do still have plenty of supportive levels to the downside. But nonetheless, this $25,000 level is still going to be extremely relevant. And especially without a lot of strong bullish volume like we just saw, that's really what it's going to take to end up breaking such a key and critical level. And now if we actually flip over to the 2-day chart here, you can see that this current candle that's forming, which does close in just under 7 hours as of time of recording, is extremely bearish. So not only does the body bearish right now, it's actually a little bit more of that doji formation. But if we look at the size of this overall upper wick, then you can see from the current level of where current prices are up to where we, up to where we had the peak of this wick was about 10%. So typically we don't see 10% wicks coming out of Bitcoin unless something's seriously wrong. And then on the flip side too, the prior bullish candle is still extremely bullish, especially since just in this 2-day candle, we saw a run up of over 17%. But if you look back to basically where we had on the middle of February, you can see that this candle itself, although not as strong as the candle that we had just closed or the previous bullish candle, we still had over 10%, so almost 12% of an upside just for the body of that one candle. So you can see how strong bullish candle doesn't necessarily guarantee that we're not going to get a little bit more slippage and downside action. So that could still be in the path and plan for overall Bitcoin experiences, especially since we've talked about 19,000 and 18.5 being potential downside targets. Personally, I don't think that the recent news events are going to be enough to actually sustain a lot of upside movement. And so I think once the hype and newness of those announcements does kind of wear off, then we will start to see normal market dynamics take off again, especially given the fact that we are now still seeing a little bit more downside out of the rest of the stock market as well. So let's go ahead and look at the S&P 5000 or 500, excuse me. Then you can see, especially on this 2-day chart as well. So if we flip over into the weekly, still going to form a little bit of that downtrend, testing some of the lows. But overall, the strength out of the rest of the stock market's not necessarily that strong as well. And so that's why when we flip back over into Bitcoin, you can see the likelihood that we are going to start to struggle a little bit more as well, especially if we look at the current 50-period exponential moving average on this weekly. We still have very nice resistance below this level, and currently it is below 25,000 at 24,525. But like we've talked about before, we do have some bullish factors given this chart as well. So really what this means is we're not going to have a lot of clarity and perfect crystal clear direction for trend because there's a lot of conflicting factors. So for example, the strength of this bullish candle completely engulfs the 3 previous bearish candles, along with having a long lower shadow. But a lot of that was due to the overall SVB and CPI numbers in the recent days. So had those events not happened, it would have been interesting to see how this candle actually would have closed for the weekly. But nonetheless, the current weekly candle is pretty much going to be a clear depictor of what we could expect next. Because have we do actually run up, break the 25,000 and this 24,500 level, that will be the first time that we've actually seen a cross after forming a bottom since pulling back from the high. So essentially what I'm saying is that in a full bearish formation like we have, where the 12's on bottom, the 26 and the 50, once we actually get these tightened where the 12 actually crosses the 26, and then we get that breakout, that's a lot different than off the initial bounce where we haven't even had the exponential moving averages in a full bearish formation just yet and having this break. So hopefully that concept makes a little bit more sense. If it doesn't, drop me a note in the comment sections below. But so yeah, I actually want to flip over into the 4-hour quick because I think what we have happening right now, and although we do have a sell-off, we haven't actually had any type of continuation pattern just yet. But we know that after such a strong run-up, that the most likelihood is going to be pulling back to set a higher low. So ideally, depending on where this low actually comes in, is going to depict, or kind of dictate rather, the formation that we're going to experience. So like we talk about frequently, if we actually see a pullback and a retracement that finds support on top of or above the 38.2, the likelihood of actually setting up a continuation and consolidation pattern does start to increase in that instance. But if we actually do continue to slip, for example, and test 61.8, we do start to increase the likelihood, especially as we run down to 78.6, of actually finding lower highs and testing lower lows and continuing a downtrend in that instance. So that's why really what happens in this overall zone, and especially being able to maintain support on top of these exponential moving averages, is going to be so key and critical to continue further upside action after a little bit of cool off and consolidation period for the bulls. We turn on the VPVR volume profile visible range here really quick. You can see how we highlighted the mass of volume is right around the $23,000 support line like we've talked about earlier in the show. But that does put us down below that 38.2% retracement. But nonetheless, I think if we can still find a lot of dip buying, that would still maintain exponential moving average support and effectively still could be an extremely strong possibility of setting up lower highs to consolidate further. But we're still going to be battling the potential of a formation like we saw the last time we got rejected from 25,000. So that's also something extremely strong to consider. But overall, based on a lot of this VPR support, we do still have a lot of support to the downside that I think we could get stopped up at before we actually have a big flush. So I don't think that's likely at all for a bearish scenario. Alrighty, well, that actually is going to be it for now, and to wrap up the show, it's just going to come down to a matter of whether or not we can maintain the 24,000 support and ideally down to about 23.5. Otherwise, we are going to expect some slippage down to 23,000 and 22.5, potentially all the way down to 21.5 as well. Not necessarily the strong likelihood right now, but those are the big factors that we are going to be looking into for the rest of the week, especially with not a lot of big news announcements to be anticipating. Do let me know your thoughts, predictions, comments, disagreements, all that stuff down below. Do love getting back to each and every one of you. Also, if you did enjoy the show, please hit the thumbs up, like, and subscribe if you haven't done so just yet. Do appreciate you sticking with me through the end, and do appreciate all the continuous love and support as always. Thanks so much, everyone. Stay safe, take care, and I'll catch you back in the next video.